Alright, good evening fellow investors. Welcome to the second video of the Lazy Man's portfolio. I am Jason. This is the second week of our hypothetical Lazy Man's investment portfolio. And yeah, it's been a very great week. We're up 5.25% now. While the SPY is only up 1.2%, while QQQ is up about 3%, and the small caps are down 1%. So the portfolio is doing very good. Mainly because we caught 3 winners and 1 loser. I think the AYX, crowdsource, and twlo is just being beast. It's up 15+% in just 2 weeks. Very, very impressive. And even though we had a lagger, that's Roku, it was down, I think, 12%, almost 13%. But all the other names are actually up about 3 to 4%. That's why we can have this 5.25% 2 weeks return. Just a reminder, we started the portfolio the day after Christmas, and now until Friday it's about 12 trading days, and it's already up 5%. That's definitely very, very good performance. Even though I don't think we'll just annualize at this rate because it's unreasonable. But I am expecting we can be up at least 10 to 15% for the whole year. And if we can reach that goal by end of January, I don't mind. Alright, so on Friday, because the earnings are coming, right? Earnings are coming next week. But that also means the corporations are not doing their buybacks anymore. So I'm expecting we will see some weakness probably next week and the week after, before the FAANGs report their numbers. And then that's why I decided to lighten up some positions. So for the 3 winners, I sold some, basically bringing their weight down to 5%. And this twlo back to 10%, just to take some profit, while the price is very high. And I continue to hold it as like core positions. I didn't take 50% off or anything like that. It's just like 10%. Just take 10% off because they are up 15%, right? So, and also for Roku, I decided to buy the dip. I bought some Roku shares and then brought the weight back up to 5%. And if Roku decides to go down more, if it goes down to, let's say, 120 or even 115, I'll definitely buy more, and maybe even raise the weight to 15% to 10%, so because it will be a lot cheaper than now, right? Now it's still trading at EV sales about 15. Well, if it drops to 120 or even 110, it will be like a number lower, like 15. So that's like 12 EV sales, which is it's good because I'm very bullish on Roku for the long term. Well, the pullbacks are healthy, so there's nothing to worry about its growth. It's still growing at 50% as a hardware company. That's very impressive. And so basically, as I mentioned on Friday, I sold some of my winners. Sold a couple of shares, not much. About like 500 and 1,000 for twlo, and I also bought about 1,000 worth of Roku, and I actually end up with net cash. So I didn't spend all the cash because I decided to leave some some extra powder on the side in case we have a pullback. So I can buy like can increase my positions, right? Buy more shares if we do do pullback next week or the week after. Yeah, so just and by changing the positions, we end up with net cash. And if our cash now it's only 1%, if the cash goes to 5%, I can add another position to our portfolio. So that's the whole point, right? So even though we're up 5%, I didn't just adjust everything and then get the 5%, and then I can add another name. I didn't do that because I don't want to do too many trades, because if you do too many trades, the commissions kind of eats your profit as well. So I do like the least amount of trades as possible. That's why I only do adjustments two times per month, and I already used one of the two this month. So it means I have one more time to adjust the portfolio until end of January, and then February we have another two. So I don't think I will do one next week. I'll probably wait until the third week or like the fourth week of January, once we have the AYX numbers, and then we'll see in general like the cloud names and software names will be bullish or bearish for their first quarter guidance, right? So yeah, that's definitely a focus on the next earnings. It's about now they're already wrapping up the Q4 2019. It's all about the guidance for the next quarter, the first quarter of 2020. And yeah, so good luck. And right now I'm very happy with all my positions. I think everything is good except the trade desk. It's kind of expensive. Here you can see it's, even considering its growth rate, the forward EV sales is about 16, and everything else is below 15. So I'm happy. But trade desk, if we go up to 300 or like 320, I'll definitely lower its weight or like cut the position, because I still have other attractive names here, like NetEase, Baba, or Tencent, and I actually find another one, LVGO. This is a medical equipment company that's just went public not long ago. I'm waiting to buy the dip once the IPO lockout expiry passed. I think it's in February. Its growth rate is impressive, and I can definitely see it continue to grow because it just raised some money. So I think they can expand their sales force and reach more people, because their reputation, they get more reputation from IPO. So yeah, and some other names like Shopify. I did buy some Shopify from my personal account at about 400, but still now I won't chase it here because it's like trading at 32 EV sales. That's just crazy. I might buy some if it drops to 400 or like 380 even. So that's like 20 forward EV sales. That's good for me, because you can look at the other ones, like Okta and Coupa. They're already trading at 20 forward EV sales. They're up a lot as well, but I like more about my twlo and AYX than Okta and Coupa, because I think they're still cheaper, so they have more room to go up. Yeah, so this is it. I'm very happy about where the portfolio is. I didn't spend a lot of time during the week to track every stock. And we had the whole crazy Iran stuff going on, and the whole just different headline risks a lot during the week. I'm very happy where we end up by the end of the week. So I'll continue to maintain this sheet and make weekly videos. And yeah, let's see where we end up after 1 year. Well, thank you for watching. See you next time.